Hello, everyone. Welcome to this week's study session. We're going to do the general market portion of the study session in one video, and then I'm going to do a separate stock uh, portion of the video in a separate video that I'll post later. So, taking a look here at starting off with the risk model, of course, you can see we went on a sell signal on May 10th, and a few days earlier on May 6th, we actually went to sell alert. That was on some distribution in the market. You can see general market has turned neutral, up down volume negative, and new highs, new lows are still holding positive, but stock participation is negative and has been negative for some time now, and that's been a real problem. When we take a look at the long-term trend following model, we're still, as of last week, or as of this week actually, but last week we're up 47.25% from the buy signal. This chart has not been updated yet, but it's also on a buy, clearly on a buy for quite some time now, since the bottom, April, I believe April 6th, coming off the lows there. Taking a look here at the risk model, and I always respect the sell signal on the risk model. And a lot of times I'm out prior to a sell signal just because stocks roll over and they stop me out. Sometimes it works the other way around. You get a sell signal first, and then you start selling some names as they start to buckle. But one of the reasons why I'm always cognizant, of the buy and sell signals, particularly the sell signals, they tend to trigger very close to the highs. And the key to remember is that uh, not every sell signal leads to a correction or a bear market, but every bear market and every good sized correction has a sell signal before it happens, and quite a ways before it happens. So it's a very good indicator to let you know if there's danger in the market. Now, here's the other thing too to keep in mind: we generally don't see any progress in the market when we're on a sell signal, and there's not much lost in between a sell and a buy. As you can see here, well, of course, we had the sell signal here that was very timely right off the highs, and then Dow went down 9,000, 9,500 points. Buy signal came back in. Pretty timely off the lows. You're going to get some trend following, so you're not going to pick the low, of course, but got a follow through day, added a stock over here, and then shortly after we got a buy signal. That led to a good rally. And as you can see, each time you get a sell signal, you don't really get any big upside until you get a buy signal. So you got a sell signal here, you got the buy signal. This was a whip in and out buy signal here, got a good move. And then we've been getting whipped back and forth a bit with sells to buys. But again, I always respect these sell signals, especially if there's no stock setting up. And that's where we are now, where we see distribution in the market, a sell signal on the risk model, and stocks that have broken down. So it's a clear cut stay out of the market for now. Now, of course, we're in a correction, certainly in stocks. We can make an argument that the Dow Jones hasn't corrected very much, but one thing to remember is corrections are good. That's where we see the next leaders setting up. Remember, 96% of big market movers come out of corrections. So we've corrected a lot in many names, and I'll go over some of that in just a little bit. But new leaders, we got to remember, can emerge off the lows and sometimes even earlier. So you don't want to wait for a risk model buy signal, or wait for the market to start being obvious that it's turned up. You want to start looking for those leaders now, and that's precisely what I'm doing. And I'll be screening after this video. I'll be doing some screening, and we'll see what's holding up and what may be potential leaders going forward. So corrections are good if you're not in them. So the main thing is to get yourself protected on the downside, and that's what we did here. You can see when you look at the Nasdaq, we got that distribution. This is where we were forming that nice big base. A lot of people were looking at this as a big cup with a handle. Yeah, it was looking great. Problem is we were seeing a lot of stocks failing around this right side, and they were really giving you a lead time. This breaking down of the Nasdaq and the indexes here on the right side, this really came very lagging. We saw this happening over and over with breakouts failing for literally months. Then we got the distribution, went on a sell alert right here where that little circle is, got 1 day rally, and then came off here, got another distribution day, closed on the low below the 50-day, and that's where the sell signal came in. Now you're getting a rally back, and this is you can see the volume is very low on Friday. So this is sort of a dead cat bounce here. Maybe get back up to the 50 a little bit higher, but at the very least case, I think, or best case scenario is that we need to put in some time here. You can see we're just still building a big base. We've gone nowhere since February, and still on this right side. So now it's yet to be seen if we're going to come up this right side and then maybe pull back and tighten up and we form a big base and maybe we get a lot of stock setting up at that point, or if we're going to continue lower and we have to undercut some lows and maybe go significantly lower. We don't know. But what we do know is that we're under distribution right now. There aren't many stocks setting up, and we're on a sell signal, and that's really all we need to know. Some look at the Dow, and you can see, it hasn't come off that much off the highs, hasn't even pulled back to the 50-day. But you're really just in a volatile, just moved up for a few days, down for a few days, back up here. Just no real direction and very rotational underneath underneath the surface here. Looking at some of these broader indexes, you look at the Russell 2000, again, just sideways since February, has gone nowhere. So at the best case scenario, we're basing here, and that's good. That's good. If we come off and we sell off and we take out the lows, well, that's going to lead to more time to rebuild bases. If we can just hold up here and we tighten up and we see stocks starting to set up and proliferate, well, then that means that this basing, the correction happened beneath the surface, and that the correction might be over. Stealth-like correction, as I pointed out. Looking at the FFTY, see again, just basing here. We were trying to set that right side, but now we got that volatility on that right side, so now we need more work. Now, I've been looking at the ARC innovation for a while here for a few reasons. One, this represents past leadership, even though Cathie Wood has been rotating out of some of those names that she was previously in, like the Teslas. I think she still owns some Tesla, but she has been pulling that back. What I want to point out here is that this is in a downtrend, down almost 40% off the highs. Now, if this ARC fund were to rally back, say to the 200-day or the 50-day, a 20% rally, a 25% rally. Whoops, excuse me. Oh, I was almost going to sneeze there. A 20% rally back would still keep it in a complete downtrend. We've been in a very, very steep downtrend and still not even close to looking like this is turning around. So again, you may see a good snapback here, but that doesn't mean we're out of the woods. Pardon the pun. All right. So let's take a look here. What's happening? The real market beneath the surface. This is what I've been pointing out, and this is what we've seen in the market for quite some time. If you go back, you had over here in February close to, I don't know, 85, 90% of stocks above their 50-day moving average. Now you've moved basically sideways for all this time, right? And now you're way down to 34%. You see, a whole bunch of stocks have already corrected below their 50-day moving average. Up until just recently, the Nasdaq was holding above the 50-day, while you see you're below 50%, well below 50%. So this really forecasted this problem taking place here. We saw it in the individual stocks. We didn't have to look at this. We saw the individual stocks failing. Another real confirmation here that you've got correction beneath the surface is, again, you had over 80% of stocks above their 200-day. And look at that divergence as the market moves, fractionally higher, but basically sideways. But you've just been getting less and less and less stocks above the 200-day until now. You're only about 50% above, a little above 50%, but you're a good distance above the 50-day. That's telling us that if this breaks down much more below that 50%, we're probably going to come down and test that 200-day on the NASDAQ. So I pointed this out a while back, and we've seen a lot of reversals, and we made a shift to short-term trading into that strength because we were getting 1 to 3 days of rally. Now it's even tougher environment. We saw the TXG, Nari, Twitter, Uber, all these names that came off bear market numbers, or at least good sized correction numbers, in anywhere between 3 and 18 days. 27% in 18 days in STKL, right? I mean, that's a big decline. Uber is down 24% in 16 days, and TXG in just 8 days, 25%. Now, the big names also, like the Apples and Square and PayPal. Actually, let's bring that up right now and take a look here. So Here's Apple. See, Apple setting up this cup with handle. It wasn't immune either. Let's zoom in a little bit. See, here's the breakout. It also squatted and failed around the pivot point. So again, we're not looking at just small cap names here. Let's look at Square. Square, another one where we actually bought it here, got a nice rally. Remember, I sold some into the rally. Then we're looking for it to set up here and build that right side. Nope, came off here, and now it's coming even more. It's below the 200-day, looking more and more ominous. PayPal, let's look at PayPal. Another one. Remember, we tried to go into this. Whoops, wrong symbol. PYPL. Sorry about that. PayPal setting up this right side. See, pivot failure, couldn't hold. Now we have to see if we can still build out a base, or if we're going to get an outright base failure, which would really be, much more ominous for the general market and would probably require a new set of leadership, a new regime, if you will, if we start seeing real base failures in some of these big cap leaders. Amazon, again, which is Teflon Don Amazon here. Again, building that right side and then just having a pivot failure. Still in a big base here. If you look on a weekly, pull up a weekly here, you can see building a large base here. But then something like a Netflix, NFLX, something like a Netflix also, you got a big base building, but yeah, it's really starting to look suspect. So we have to see if maybe we're in a stage 3 topping phase in some of these bigger names here. Not sure yet, but just starting to look suspect. Tesla, another one where just could not hold. Was setting up on that right side for the umpteenth million time, right? And just came off here and just can't hold. And now down by the 200-day, we're going to have to see if this can build a base or if it's going to get under more pressure. A lot of people talking about Upstart, right? UPST. So I want to show you something here. And again, you may look at this and say, oh, this is, trying to form a base here or whatever you want to call it. But take a look at this volatility. This is what you want to avoid. All right. This stock here rallied off the lows 41% in 2 days, right? 41%. And then came back down 30% in 2 days. And then went back up as yesterday Friday had a big day, but right off the lows rallied back. What is it? Another 27, 28%. We're talking about in a range of between 30 and 40% back and forth 3 times, all in 4 days. I mean, that's just a market or a situation that I want no part of whatsoever. I don't care if the stock goes up 1,000% from here. There's just way too much risk, and that's what we're seeing here. That's all this volatility that we're seeing. Taking a look here, one of the bright spots is that we're getting some improvement in the sentiment. You can see the AAII numbers. The bulls came down to, I guess it's about 36% from up around, was it 56, 57%. So that's good. That's good. We're getting some bearishness. When we look at the investors' intelligence numbers, the bulls they're at the high 50s now. So we're still up around that 60%. Is there room? Yeah, there's room to the upside, but it's still a lot of bullishness here. I'd like to see that improve. If you look at bulls divided by bulls and bears, you're up close to that 80% level, and that's really a tough spot there. I mean, we've seen rallies from there before, but usually you get pulled back in the sentiment and usually in the market to be able to enable the market to move even higher. So stocks are in a correction. They've been in a correction for a while here, and we've seen that sort of just rotating through stock after stock after stock, breakout failure after breakout failure. There's very few setups at this point. There are some. We've seen a few names. I'll talk about a couple names that recently broke out from decent setups in the next video in the when I talk about individual stocks. Heavy rotation taking place, gaps on earnings. We talked about this last week. Too much volatility, and the main thing is you got to really stay away from the FOMO trade and not force things, because the Dow or whatever you see that might be pressuring you, the only thing that should be pressuring you, the only time you should feel pressure to get invested is when you see a lot of setups and the setups start working. Yes, then you should feel pressure to get invested. That's good pressure. Everything else is bad pressure. All right. So as long as if there's no stock setting up, then you just wait. It doesn't matter if the Dow goes to new highs and goes up 20%, you just wait. you wait. It doesn't matter. You're not trading the Dow. All right. If you were trading the Dow, if that was your job, was to, capture the Dow, then, maybe that should pressure you. But that's not what you're trying to do here. We're buying individual stocks, and sometimes the market indexes will rally. You will have no stock setting up. And there's times where the market will come even down or move sideways, and you'll have tons of setups breaking out, and you'll make a fortune during that time. I've had that happen over and over and over during my career. You're not going to just lockstep with the market, and if you did, you'd probably have market returns. So you're looking for alpha here. So anyway, that's pretty brief this week. There's not a whole lot changed, except we just have to wait and hope that this correction sets up something that we can have a buying opportunity in a fairly short time. If not, we'll wait, and it'll be even better buying opportunity. The longer it takes, the deeper the correction goes, the more you're going to have better setups on the other end. Real quick, master trader program. I know it's a ways away in November, but this is something that, if you have not considered, you should definitely consider it. This is the A to Z, and it's a great. This year is going to be phenomenal, probably the best ever. We've got multiple market wizards. So myself, David Ryan, Tom Basso is going to be a special guest, and Larry Height, also with Mark Ritchie, and I don't know who else. We might have some other people too. But anyway, there's a good review too. If you go to my website, if you go to minervini.com, there's a great review from Stocks and Commodities. If you want to learn a little bit about it, if you don't know much about it, you could read that review. All right, so I'm going to get back to it, and we'll get the next video set up for you. And that probably won't be till right now. It's Saturday. I'm going to actually post this today, but I probably won't have the other video ready until at least late tonight. Probably tomorrow, though. All right, on Sunday. All right, bye bye.